Hi guys, welcome back to another market outlook where I analyze the major forex pairs that I have on my radar, and basically let's get into the video. Starting on the dollar index on the daily time frame, I see that there is some upside possible, also if the fundamental news shift that the government may not be cutting rates for too much, and maybe they are going to be hiking or holding a bit more because of inflation issues. So I see that we could definitely reach this high here, this liquidity point, but I would much more likely prefer this supply zone to push it down to liquidate this low first and then to get into this high point here. So right now the dollar index, as you see, is a bit consolidative, which makes everything more low probability, but right now I would focus on just to trade from liquidity point A to liquidity point B. So we just got to be careful what happens in the fundamental scene, and we're going to see what market structure forms, because right now it's pretty much in nowhere's land, because this supply zone is in control here, but this demand zone is in control here. So supply is fighting against demand, which makes everything low probability. Moving on to Euro USD, every dollar pair becomes less likely to have some form of move because it's so consolidated, the dollar index. So as you also can see here, it consolidates a little bit here. For example, we try to break out, we straight away get a move down. Try to break out, again a move down, then shifting structure, and then we go up, and now we consolidate and we broke out a little bit here. So from here on now, it's still like no move. EU doesn't look clean at all, because this is again like supply fighting against demand. So in this instance, I would stay out and wait for some more development. For example, if we break out like this and then see the retracement into some levels, take out liquidity, which is 0.5 fib, and also like some supply zone that will be formed here in the future, then I would be happy to short it after a change of character. But right now it's no good. Or if we see some break confirming this structure, then I would be happy to buy. But right now it's a little bit tricky. Then GU. So for GBP/USD, it looks more clean. It looks more clean towards the upside because we have a clear structure. We have this break up here. We reached liquidity points, and from we reached liquidity points before forming this low, which makes the low strong. So this is the low and this is the high. We are reaching discount prices, which makes a next push more likely. And also we liquidated some points in the move itself, like here, or like here, like this almost final low. Then we saw a change of character up, and then a change of character here. So we saw this breakdown and then this change of character up, making this the new impulse. And in this new impulse, we just reach a liquidity point, which makes it likely that we could maybe, after liquidating this point, see another drive up to make the new break of structure. So this is the more likely move. This is one of the more cleaner pairs. Maybe also get a hedge position on this one. So maybe like place just a big entry like this, or like here with a wide stop loss below a protected low, and then look for some shorts maybe on EU, or look for some shorts on other pairs. So this is like the framework for now. Then AUD/USD. The AUD is really strong, which makes it a little bit still in the upside, so it's not like dropping as hard as other pairs on the structure. I would like to still buy it up because it's the AUD, and right now we have this break up, and I would like to liquidate some points in this move up before doing anything first, and see some form of a retracement for going up because it's a little bit overextended. So from this point or this point, I'm going to be looking for buys, and that's basically it. Then NU is also bullish because we had this whole move down, like this whole bearish move down. Then something shifted in the fundamental framework. So the New Zealand dollar started hiking instead of cutting. Then we saw a retracement starting to form. And then the war in Iran started, and then it dropped a little bit further. Now we reached liquidity points that are major here, like these two equals, and we saw a break of structure up. So we saw this break of structure down, and then this break of structure up right here, making this a bullish move now again in this impulse. So right now I would just wait for some further buys, maybe even now, because as you can see, we liquidate this thing, like we liquidate this low, straight up go up, break of structure. We liquidate this low, then we come back to liquidate again and again. So we took liquidity 3 times, and then we go up straight away, break of structure. Now we liquidated the final move here, and it's possible that we straight up go up again. So this is definitely a possibility to have some more upside. Then looking at USD CAD. USD CAD is bearish because we have this move down. So we have like this break of structure down, and we got liquidity positions above here. We took out liquidity, and then we straight away saw a move down. So now this is the new move down, and in here we can look for liquidity points and major driving points down. So for example, we got this liquidity point here, which could drive it down, and there's no reaction here. So I would just buy the USD CAD until we see a market structure shift, for example like this. Then I would be happy to sell. But right now I'm just buying with the momentum, for example on the 1 hour or on the 4 hour if we have some clean structure, and I'm just further buying it up until we get some shift, because there is no point on waiting for months until it shifts to then trade it down, because we can just trade with the impulse, with the stronger retracement right now in itself. And if we have no reaction here, then we're gonna just buy it up until here. So this is the framework right now. For USD Swiss, it looks a little bit similar because I waited to buy, so I wanted it to buy here until this and this liquidity point. So this and this kind of were my goals, and from there I just bought it up and got some TPs until this point. And so now I expect maybe if we see a change of character to short it down, because we have this strong trend down that's been going on since the 31st of March, and that's been going on like for a long time. And right now we are just in the new impulsive phase down. But if the market structure shift never comes, and if the dollar is strong, and there are like some rumors that the Swiss may be getting weaker because the government doesn't want it to be as strong because it hurts their economy, then if the market structure shift doesn't come, then never trade it down. That's the simple answer. So here, as you can see, this is the yen basket, and we got an intervention from the government in the past time, like here, and also like big spikes here. And for me, the yen basket becomes untradeable in this time because we took a lot of liquidity. That's good because the government intervened. We didn't change nothing though. Like it could obviously go down, and that was like my plan. And I did take a short here and got all of this momentum down after they intervened the second time, but it becomes even more and more untradeable because of these big spikes, and you can get spread out really quickly. And also, we don't know when the next intervention may be happening. Maybe a new, bigger one will be happening and they will buy even more. So this is the tricky thing about trading the yen right now. And obviously, if everything stays the same, the yen should just be dropping again, because nothing fundamentally changed about the yen being stronger or weaker. Just they protected a little bit with the intervention. So I would stay out of this one. So as you can see, I had like this position, but I closed it sooner. I closed it like around 1-to-1. So this was the thing. And I would be careful with the new intervention. Also in Euro Yen, I thought it's possible to have some more upside, but we don't know when they're going to intervene again. So then, moving on to EU50, you can see I'm in this trade myself. So let me break it down. With the war in Iran, we had like this big dip down, and now the markets are cooling off. So we took a lot of liquidity, we saw a breakdown, and then a market structure shift up. And in this new impulse here, we have liquidity taken here, and liquidity is here. We took liquidity here, and on the 4-hour, we saw a shift down, and then a shift up. Then a shift up. And from this like demand zone, I'm expecting some further upside. Right now it's a little bit in drawdown, but it's okay because even if I lose, it's a good loss because I followed all my plans and all my strategy. And I'm expecting this to push it up. Okay, so moving on to gold, which will be the last pair for us. We were consolidative here, so I wouldn't trade it. And now we broke out again towards the downside. And my next like target for gold will be this, one of the final lows of this move higher. So now I will just try to short it in towards the downside until we can reach this move and maybe then get a long. So we are here bearish, so we have this breakdown, and I consider this my high, and now somewhere here will be my low, or this is already low, until we get a retracement, and we get liquidity points right here. So I'm going to be waiting for a retracement and then a change of character, which should be clear. So basically that's the video, guys. Subscribe to the channel if you want to see more educational videos. Leave a like down on the video and comment down below what your thoughts are on the market, and I'm out.